To kick things off, I'd like to express my appreciation for your interest in our turnkey business opportunity. Extending a warm welcome, we're excited to introduce you to our cutting-edge proprietary software, available for licensing within exclusive territories throughout Canada. Today, you'll be joining us for a demo that vividly illustrates how our software, solutions, and support can make it seamless for you to become a lender in your own exclusive territory in Canada, attract and onboard a steady stream of new and returning borrowers through our software, and effortlessly approve and manage loans using our intuitive back-end dashboard. As we delve into this exciting venture, keep in mind the tremendous potential for financial success. The demo is 30 minutes long, but we are confident that by the end of this presentation, you'll be as excited as we are about this opportunity. The presentation will answer many of your questions, but if you have any technical or business questions, send us an email to the addresses below or give us a call, and you'll get an answer right away. So, let's get started. We'll begin with what a borrower sees, a custom-built website designed to provide information about your services and invite them to apply for a loan. To demonstrate, we're going to apply for a loan, and we'll follow it through the system so you can watch the software in action. We'll also talk about setting up your company and what it takes to get licensed and how we can assist with that process. This is one of our demo websites. To become a lender in Canada, you must have a consumer protection license. Here, you can see the mock-up of a consumer protection license. We help you get all the documents submitted to consumer protection so you can get your license and start issuing payday loans in Canada. Then we help you get your license set up and we build this website for you. This is one of the demo websites that can be customized to whatever name you choose. The name you see here would be your loan company name, and we would customize the website for you. We would input your consumer protection license on the website and set it up, allowing you to start issuing loans as soon as possible. This purple pop-up message highlights one of the rules of consumer protection. You must clearly display your lending license and you must show the breakdown of a loan. The annual percentage rate is 391.07%. This is very important to consumer protection. They really want to make sure that the borrower understands that it's a high-interest loan. So you must make that clear to the borrower before they can move forward on the website. Then the borrower decides, yes, I want to get the loan, and they close this window. The website we developed for you is informative and professional, encompassing 187 pages written with all the rules and regulations of consumer protection in mind, so that it doesn't go outside of their guidelines. It's designed to inform readers, but also to invite them to obtain a hassle-free loan should they need it. The language we present builds confidence, safe and secure, expert support, no hidden fees, inviting the viewer to start the loan application, reassuring them that they may apply immediately, know immediately, and receive their money. Fast and flexible, the website shares all the important and necessary information and requirements to get a payday loan, so the reader can make the decision to move forward and apply for a payday loan. The site has so much helpful content. For example, in Canada, there is a child tax benefit. Many people like to utilize their child tax benefit to qualify for a payday loan. This page, along with many others on the website, is specifically written for search engines. I'll speak more later about marketing and SEO, but understand that the website we create for you is designed to direct borrowers to your site through all search engines. Think of this website as your 24/7, always-on digital marketing agency, attracting borrowers to your service. Once they're there, they see multiple calls to action. So you can apply right here. You can click here to apply. There's a sign-up tab here. It's so easy for your borrower to start a loan application. We want to show you how easy it is using our user-friendly calculator. Let's start a loan application. Let's say we want to borrow $1,000. You'll notice a 1, 2, and 3 here. By law, if you get a payday loan, it must be paid on your very next payday. However, consumer protection expanded this and allows the borrower to spread it out over 3 payments, spanning 3 paydays. The rule is you can get a payday loan with 3 payments, but it must be within 62 days. Someone who is paid weekly or bi-weekly will be allowed 3 repayments. However, someone who gets paid monthly will only be allowed 2 repayments because that 3rd repayment would go outside of the 62 days, and that would go outside of consumer protection. For this demonstration, we're a borrower and we want 3 repayments. We're in British Columbia and we apply for the loan. When a borrower clicks Apply, they are taken to the sign-up page. The functionality of this page and much of our site is powered by Microsoft Azure, which is an industry-leading cloud service that allows you to leverage all of Microsoft's security features and functions. Microsoft is our partner, and with Microsoft Azure, there are a number of security and validation features. When a borrower signs up, if there's a problem with their email or contact information, they'll get notified. All of the backend is secure. Azure uses something called a token, making it impossible for someone to hack into another person's account. When they input their email address, Azure sends them a code, and that's how they create their account. We'll use a demo account to illustrate the features. Now, the very first time that a borrower signs up, they don't actually land on this page. They will arrive at a profile builder where they'll input their date of birth, phone number, and address. This is another outstanding benefit that we offer. In addition to the 187-page website configured specifically to draw in traffic to your site, Google and Meta ad campaigns, and all the other digital marketing assets we provide, borrowers in your territory are seamlessly connected to you. This allows us to leverage a suite of marketing assets to bring borrowers through the door. For this example, if this address was within your territory, as soon as this person signed up, it will automatically be assigned to you. The entire backend will be completely customized with the name and logo of your loan company. So, after they've filled out this profile, selected the licensee, they will come to this page. I'm going to revisit this page in a short while, but before I leave, I want to direct your attention to this sidebar with shortcuts designed to give borrowers fast access to the information they want. They can view their loans, they can pay for the loans, they can check everything out. Very handy for them. They can view status and view these frequently asked questions. We have a page just for the major frequently asked questions. These vary based on province. For example, a borrower in Saskatchewan will have different frequently asked questions than someone in another location. This makes it quick and easy for the borrower to get their questions answered. We have a support ticketing system here. Borrowers can also call customer support, and that experience is customized to your company. If they fill out a ticket here, there's a drop-down menu with different departments. They can indicate that they are having problems with billing, phone verification, ID verification, what have you. They can get all of those things answered here, and it'll show up in their message box. This is a borrower benefit and a failsafe against aggressive spam filters because it will send an email to the customer and it will save a duplicate in their message box over here on the left. This is the back end, which is completely mobile friendly. We have an app for it as well. So it's very easy for the borrower to contact customer support. If your borrowers are having a problem logging in, you, the licensee, have a back-end team that takes care of that. If borrowers are having a problem with the loan application, your back-end team takes care of that. The bottom line is you never have to worry about the customer. It's a very turnkey business for you, the licensee. As promised, I want to get back into the loan application process. The borrower is going to begin a loan application here. This 6-part process is the proverbial brain of the back-end portal. The system will require this information from them for every loan application the borrower wishes to have considered. Here at step 1, a lot of verification is happening within the form, and if something gets flagged, it's going to show up in the back end. I'll show you that a little bit later in the demo. The system is analyzing a lot of information here about the borrower. Current contact information, employment information. If they change jobs, addresses, or the amount of their pay, the system will process this, even if they got a loan a month ago or 2 months ago. You want to have all their up-to-date information. Various things are happening here. The borrower must verify that they are a Canadian resident to get a payday loan. This form is very intelligent, and it's validating and verifying input along the way. Step 2. Here in this drop box, we've got all the major sources of income: full-time, part-time, pension. There's child tax benefit and disability. Ultimately, the borrower needs to prove that they're making $800 a month. How do we verify? The system will verify banking information authorized by the applicant, which I'll demonstrate in just a minute. The borrower must input some pay dates, which I'll demonstrate. For this demo, let's say I get paid bi-weekly. If I try to skip my payday, this is going to lock and it's not going to allow me to move forward. The rule of consumer protection is you must pay your payday loan on the next payday. The system is prompting the borrower to consider, okay, I get paid in 2, 3, 5 days, maybe I can wait. So it'll lock here, and they won't be able to move forward. They'll just usually spread it out over 3 paydays so that they can get the loan. In step 3, the borrower will have to put in 2 references. Your back-end team will verify the references, ask certain questions, and all that information gets added to this customer's profile. In step 4, they input their employer information. Note that the rule in Canada is you can call the employer to verify that they are working, but you can't call and collect money. All this information gets added into their profile, and their employer will get called to verify that they're working and there's no problems. Step 5. As demonstration, we indicated that we want to borrow $1,000 on the front end of the website. But you see, it actually limited us to $500 because we said we only make $1,000 a month. That's because by law, you can only borrow up to 50% of your income. This varies only slightly based on the province. For most provinces, it's 50%, except in Manitoba, where it's 30%. There, you can only borrow up to 30%. However, the software automatically adjusts based on the amount of income that the applicant says they earn. So in this case, it's limited to only $500. The borrower indicates they want the full $500 and they want to spread it out over 3 repayments. This is called a pre-authorized debit or PAD, which is a term in the payday loan industry. It means at the end of the term of the loan, the system will debit their account on the authorized date. Another word for it in Canada is an NFT. If a borrower clicks on the Terms and Conditions box, they can read and learn more. Basically, it says, we will be going through your bank account so that we can verify that you are making the money that you say you're making, and we can determine if you can get the loan or not. If we agree and continue, it takes us to step 6, which further demonstrates how intelligent the software is. We have connections to over 300 banks and credit unions across Canada. Here, they log into their online banking like they would normally in the secure portal. They have all the major banks and credit unions and can filter to search. We'll choose Test Bank to help us demonstrate and log in with some dummy credentials. While the software is analyzing, I'll show you what happens on the back end. The system will create a report on the account using access which has been approved by the loan applicant. The system analyzes the data and conducts a risk assessment by cross-referencing over 500,000 other banking reports from other payday borrowers. Occasionally, a prospective borrower will ask if you do a credit check. You do not. A credit check provides a long-term 3 to 6 month outlook on an applicant. Payday loans are short-term, so our software examines their day-to-day purchases to determine if the applicant is consistently paying their phone, rent, or TV bills. If they receive an NSF for those, we want to know. The software runs an algorithm to check information and provide a risk score. Someone who has a risk score from 0 to 6 is someone who is going to pay on time. Someone who has a risk score from 7 to 13 is someone who's going to pay, but they're going to pay a little bit late. And as a lender, that's good because by law, you can add a charge when people pay late. There's a daily interest charge and it adds up quite substantially. I'm going to show you that on the back end. While the software is running that risk score, the system is also analyzing other information. This is another intelligent software feature. The software is verifying their bank information. If they input the wrong institution or account number, then it's going to flag. If their identity doesn't match, for example, if they're Joe Smith on the loan application, but there's a completely different name on the bank account, then the software is going to catch that. There's job verification. It's checking their employment. If they said they're working, it's looking to verify that. If they missed their payday last week, it might indicate that they've lost their job. The system evaluates their income stability. It's looking at non-sufficient funds charges or NSF charges. NSF charges and overdue charges are viewed differently in the payday loan industry. As a prospective payday loan borrower, if they have an overdraft, the bank still trusts them. This is viewed as better than if they don't have an overdraft. When it looks at NSF charges, it's considering, did they pay their cell phone bill or did they pay it later? It's looking at things like that. This list shows the categories all added up together so that we can do further analysis on the back end. Looking at their total debt and other data, here are line-by-line transactions. They went to Tim Hortons and Shoppers, Drug Mart. It's all these day-to-day transactions. One of the reasons we scan this data is to find something like this. Paysa Cash MSRP is recognized as another payday lender, indicating a previous payday loan. This reassures us that it's a real person. Often, borrowers that are applying for payday loans have various payday lenders. What would be a red flag is an application arriving on a Saturday or a Sunday where the income reported is $200,000 or $300,000 a year and they've never had a loan before. That's a red flag. The borrower would be verified to make sure that there's no fraud going on. It's one of the many aspects the software is examining to verify that the customer is who they say they are and their data is accurate so that we can get their loan approved. All of this is happening on the back end. The system is using proprietary risk management software to analyze all the data, categorizing it into relevant data points and constructing an applicant profile. Very quickly, the system produces a risk score that culminates in a yes or no to their loan request. Then the borrower arrives at the loan agreement page. This is the same loan agreement that a borrower would sign if they were to walk into Money Mart or a similar location. When you get your consumer protection license, you must agree that all of your borrowers will sign this loan agreement. A big value here is that the system will generate this agreement based on the borrower's information, without any need for action from you, the licensee. They're all similar for all the provinces, but there's a couple of changes depending on the province. Your site will have your specific loan agreement available for your borrowers to sign. A few things are happening here. Over here, this is where the borrower's information is. This is customized to the name of your loan company in this area. Your license number would be there, and then your email would be privacy at your domain. The details of the payday loan agreement are very important to consumer protection. This must clearly break down the loan. For this demo, a $500 loan taken out today for a 36-day term at $15 per month, it's going to cost $75 in interest. So the borrower would have to initial there to indicate that they understand that. And then you have to have that annual percentage rate again, clearly so that the borrower sees that it is a high interest loan, and they would sign it confirming, yes, I'll be paying $575 back. This clearly shows the borrower the dates when the system will be debiting their account. It shows exactly how much money the system will debit on those dates, so they know they must have that money available. Down here is the same information in layman's terms. I'm getting $500 today, and I will be paying $575 back at the end of the loan. Here's where they would sign. On the next page, we have the terms and conditions. It's got the NSF charge and then the daily interest charge that will be added every day that they're late. This is the pre-authorized debit or PAD agreement. This is just saying that yes, you can go into my bank account on those dates and you can take money. Here's information on the loan company that will be going into your account. This is the borrower's account and their account number. And these are the dates and the amounts that the borrower must have money in their account. The very last page is very important to consumer protection. Between 24 to 48 hours, the borrower has the chance to cancel the loan. So, if you sent them $500 and they decide that they didn't want the loan, they can send that $500 back. And by law, you can't charge any interest. It happens very, very rarely, but consumer protection wants to make sure that they understand that. So they will have to fill that out, and then they will get a receipt after they've filled it out. So if after they've read the loan agreement, they just say, yes, I'm interested, I would like to get a loan, then from here they put in their signature. They would fill it out, put their initials, and then they would sign the agreement. I won't do that for this demonstration, but what would happen next is it would return to this main page, and this window here would be gone. And if everything checked out with the software and the AI and the process was successful, then there would be a message saying, congratulations, your loan has been approved. Check your email for a message containing the password and look for an email so that you can collect your money. Now, if there was a flag, maybe something was wrong, or they wanted to verify some more details, the message would just say, congratulations, your loan has been successfully submitted. We're working hard to get all of your details verified so that we can get your loan approved. If we call you on the telephone, be sure to answer so we can ask a few questions. Next, we're going to take a look under the hood, and you'll find out exactly how everything goes into the system and how the software is analyzing all that data. Here we are under the hood. This is the loan dashboard. If a loan gets flagged for something, maybe some data has to be a little bit more verified or checked, then it's going to show up on the loan dashboard. If it was automatically approved, then it'll just go straight through here and it won't show up on this dashboard. These are the incoming loan requests. Here's your company name. Next to the applicant's name, you'll see a number that represents the amount of loans they've previously received. Here's a 0, another 0, here's a 5, a 26, a 17, an 11, and a 10. Because payday loans are a very repeatable business, when somebody becomes a borrower, they often become a repeat borrower. This is good for you as a lender to know that they're likely coming back. If their family won't lend money to them and the banks won't lend to them, they feel frustrated due to lack of options. So, when they do get someone that's willing to lend them money, they're actually quite happy to make their repayments. So don't be surprised if you get repeat borrowers. Let's take a look at that top entry. It just came in. They want one repayment date. The duration is a 46-day loan. The risk score is 4. This one is red and this one is red. So they still haven't phone verified and ID verified. And on this one, actually, the data from the API is still checking and giving it a risk score. Down here, this one's got a green phone icon, so they actually have to phone verify when they get their loan. And when they verify, it must be a real Canadian provider. It can't be a voice over IP phone number or a virtual phone number from an app. Those won't work. It must be a real phone number verified with a Canadian provider. And then they also have to do an ID verification. They must input a piece of Canadian government ID as well as a selfie, and it will scan their barcode and pull all of that information. Then the system will run an assessment on all that information to verify that it's the same on the loan application, it's the same on the bank. It's checking their signature on the loan agreement they signed. It's also verifying that the selfie they provide is the same as their government ID. This is all happening automatically when they do that. This one has a couple of repayments. This one has 1 repayment. This one has 3 repayments, 3 repayments. You can see there's a lot of repeat borrowers. Now we're going to take a look at the borrower more closely. This is Nathan. He has had 26 loans here. Let's go into it. There's a lot going on here. I'll give you an overview of what you can focus on. All the information on the bottom down here comes from what we filled out in the loan application. It all populates here. It looks pretty good. They are a Canadian resident there. Their SIN number has been verified. You can see their reference numbers here. The system also captures their IP address, so we can run an analysis on that. The backend team will give these references a call and add all that information in the person's profile. We have their primary income under its own tab, so we see that they are on employment insurance and that they get paid bi-weekly. Obviously, this has all been verified if they've received 26 loans. Why was their application sent here by the system? They probably just had to have a few more verifications. The AI scoring is here, so this is where the AI and machine learning kind of work together. It's got a risk score of 0. This person is going to pay. You can see here, this is green, which means that there aren't multiple persons in the same address. This is another thing about payday loans. As soon as somebody starts getting a loan, you'll start to see their family and their friends. It's a very referral-driven business. When the system identifies those connections, it's able to notate them on the customer's account. It found a wife, a husband, and roommates. They're all looking for a loan, and the system is observing those connections and capturing them in the profile. If this one was lit up red, the system would associate it with this account and check to see if that other customer is making their payments, things like that. This pop-up alert is actually a new loan that just came in. They're coming in regularly down here. You can see there's only 1 phone number found for this borrower. You can see if multiple people are using the same phone number, the same work number, the same IP address, the same references. That way, if somebody comes in and tries to give 30 people a reference, you're going to know right away and it's going to be verified. The system can see they've only had 2 NSFs. The system sees they had 7 loans by the end of the month and they were only $385 in debt. This is actually keeping an eye on how they're managing their finances. There can be a lot more than that, but we just want to make sure we're keeping an eye on that and they're able to take care of their money. It doesn't matter if they're lower, but as long as they're making their payments to whoever else they're borrowing from, that's what is being evaluated. If everything's been verified, all their references have been called, their place of employment has been verified, if everything's good and the system wants to issue a loan, the system would send an email from your loan company to the borrower that would say, "Congratulations, you were just approved for a loan." Keep an eye out for the Interact transfer email, and this is your security answer. The system sends a message to the bank instructing them to send an e-transfer to the customer. When that e-transfer goes to the customer, they use their security answer. Then the loan will go into kind of a pending status, and it's waiting for them to collect the money. And as soon as the borrower collects the money, the pads are automatically initiated. That means as soon as those anniversary dates when they're supposed to make a payment arrive, the system will automatically debit their account. The takeaway here is that the system reviews a large amount of borrower information, which it analyzes, scores, and cross-references so that we may confirm that they are eligible to get a loan. This allows it to evaluate the health of their income, but also maintain contact should we need to do so in the future. This superior data gathering and vetting places the licensee in a unique position with less risk and more control. I'll talk about how we make collections if needed a little bit later on in the demo, but right now we're going to go into the licensee portal and I'm going to walk you through what you see and what you'll be able to do. This is a look at the licensee portal. As a licensee, you have your own dashboard. You can log in 24 hours a day, 7 days a week. This is what you see. You don't have to worry about the tech. You don't have to worry about the customer support, the collections, the marketing, anything like that. The whole thing is very turnkey. So you just log in and keep an eye on what's going on in your account and what's available in your balances. I'll give you a tour of the dashboard. This $36,000 here, this is the money that's available right now to be lent. Pending, paid. If a loan goes out for $500, it's going to show up in the pending balance. This balance is when we pad a borrower to collect money. It takes 3 to 4 business days to get the result of a pad, and until then, it will show as a pending balance. If, for example, the customer got the wrong password, it doesn't happen often, but once in a while, Interact actually holds the money for 24 hours, then it'll release back into the available balance. If the system were to initiate a pad on somebody for $575, that's going to show up in the pending balance for 3 business days. The bank holds the money for 3 business days, and then it'll show up in the available balance. And that's just money added up in the bank account over here. There's how much money was put into the account. Here's the e-transfer balance. I'm going to talk about the e-transfer balance here in a second. ROI. This is the ROI to date for this year. Here's what it was for last year. Total interest earned is how much the licensee has earned to date since the operation started. It is now about $163,000, plus $17,000 in interest and late fees. To reiterate, those interest and late fees, they actually add up quite quickly. This is just the projected ROI, the annual if it was to be linked out 6 times throughout the year, the projected ROI over here. This graphical representation shows what's going on. Pending paid indicates that if the system were to send out a loan right now and is waiting for that anniversary date, it's going to stay in the pending paid until that anniversary date triggers, and then it's going to show up in one of these other areas here. Pad fails is where we tried to go into their bank account at the end of the term of the loan, but there was no money in the account. The bank tells the software that there was a problem, and the software automatically sends an email and an SMS to the customer, telling them that there's a problem with their bank and there wasn't enough money in the account to repay their loan. A lot of times, this is where they'll send an e-transfer. That's why we have total transfers up here. They'll send in an e-transfer if they're late, or sometimes they'll actually pay it early because they want to get another loan. That's why there's an e-transfer balance up there. Now, if there was a problem, they didn't get a hold of us, they didn't make their payment or something like that, the licensee has a back-end team that follows up with that and makes sure that the money gets collected. They call them and set up a payment arrangement and get the money sent in. In the payday loan industry, there is a 6% default rate. It doesn't matter how great the borrower is, they can default on their commitment. It's going to go up and down throughout the weeks and months, but at the end of the year, it's going to work out to about a 6% default rate paid. This represents the loans that went out and were repaid. Partials. If there was a loan that had 3 repayments and they only paid 1 or 2, then it's going to stay in here until it's been completely repaid, and it's going to show up in other areas. Here are your total loans that went out, paid partials, things like that. Lending money that was put into the account, things that are in collections 0 to 30, 31 to 60 days. All of this information is in this download report. As soon as a loan is approved, then it automatically shows in the download report. You can see it in your loan's dashboard. Everything's in there, including all the transactions, e-transfers going out, and pads coming back into the system. It all shows up in your banking report. Let's do a quick recap of everything. TaxCash helps you get started by assisting you in obtaining your consumer protection lending license and getting your website up and running. We gave you a look at the back-end portal where prospective borrowers can log in securely and request a new loan. We saw how the licensee is selected. You learned about the marketing partnership that TaxCash provides, motivating borrowers to your site. You saw the borrower portal where they have everything they need to make payments and apply for new loans. We reviewed the loan application and all the information that TaxCash gathers for that. And we established how all of the information is cross-referenced and checked by the back-end team. We shared some of the crucial borrower data that is being analyzed, such as persons who are related, who have the same address or phone number, information that helps determine whether they should be offered a loan. Then we showed you how the loan gets approved and toured the licensing dashboard, which allows you to see at a glance how everything is going in your territory. You can see your loans, you know all the transactions, everything that's in your dashboard report, it's in there. That concludes the demo. Starting your profitable business has never been easier. With our seamless services, expert handling of SEO, marketing, collections, and customer support, your success is our priority. Got any questions? Send us an email to the address below or give us a call and you'll get an answer right away.